All right, I guess we should get going. Let me get to the stream page. All right. All right, well, welcome to Forex.Today. Gee whiz, hang on. All right, here we go. The YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. I love money. I'm a capitalist big dog, but I like to make the world a better place. So I missed a couple of days late last week. I can't remember. Was it Thursday and Friday? But I was away. I was on the West Coast contributing to the board of directors meeting for a nonprofit organization. And so, talking about endowments, but also talking about how to make the organization more successful and serving its constituencies. All that kind of stuff. So that was days and days and days, but it was really, really, really cool. So, so I missed you. Did you notice I was gone? Hopefully. I thought I'd give you a little look just to prove that it actually happened. These are just out of random order. Just random order kind of stuff. What happens if I click here? Yeah. All right, so it's all going to do it for one thing. So we're whiteboarding things. We did kind of little brainstorming things, which was really cool. Here's my triple screen laptop. And you can see the size of the room and the size of the board. So the board is large because we have the board of directors, but we also have the executive team that actually runs the organization and other stakeholders as well. Kind of cool, right? So you can't quite see me. I'm sitting here, which is also seen over here. Oh, there's the view from my hotel room. Is that it? Yeah. Oh, there's the hotel. So anyways, that's just sending to my family. So anyways, boop, boop, boop. Boop, things getting written down on the boards. See? Cool, right? Anywho, so imagine doing that for 2 days. Yeah. Yeah. But it was fun. Right? It was fun because to take a break, one of the things that they did was they hired a professional dancer, and we went down to the yoga room that was part of the big, I don't think I'm supposed to say the name of the company that hosted us. But anyways, we went, beautiful building. And down on the main floor, they had the exercise room for the building and for the company. And so in there's like a yoga / dance studio, maybe aerobics or something. I don't go to gyms, so anyways, that looked like a dance floor with mirrors, right? And so they hired a professional dancer and taught us how to dance, and then we had to break up into teams and make our special dances and dance in front of everybody, and it'd be silly. So that was a really cool icebreaker. Yeah. So anyways. So yeah. So there you go. So let's get back. One thing that I want to note that everything is now loaded into TRADARS. So QuantBox is in TRADARS, Investor Bootcamp is into TRADARS, and we are now connecting the membership databases and stuff. But it's all in one spot, which is really, really cool. So we have a big week coming up in the sense that everyone's waiting for Jackson Hole on Friday. Big week. But luckily we have the tools in front of us to make proper decisions, both technically and fundamentally. We can look at the calendar, but you probably should already know the calendar. We could look at things like we have volatility analysis, so I can tell you what things actually will be moving the market in the near future based on past. It won't have Jackson Hole because it's not an economic event. The volatility is for event-driven strategies, aka scalping the news. Did you answer the poll? Looks like you did. Thank you very much. Let's see your mood. It's calculating. Wow. This happened last week too, right? I closed the poll and it takes 30 seconds to calculate the poll. Really? Wow. Maybe my chat's not updating. No? All right. Well, we'll see. Still waiting for the poll. Well, I guess I'm not going to wait for the poll anymore. Didn't get us the results. Well, thank you for participating in our poll, but YouTube does not want to give us the answer. Okay. Wait, there's over here. Oh, man, it's all over the place. All right, let's do this. I finally found what it's doing. All right. 50% of you are risk on. How do you make a decision like this? What's the best way to make a decision like this of whether you should be risk on, risk off, or neutral? This is where you actually type. It's a real question. Equities? Yeah, for sure. Using the QB? Well, fundamentals is too broad. Right? Yeah, so a lot of people are saying quant box. Don says seasonality. Yeah, okay. Yeah, not. I would say a little vague, but acceptable. A little broad. I mean, is it risk on or risk off today versus the next 6 weeks? But it's acceptable, Don, right? But we want a little more drilled down. So, as a member of TRADARS, you can easily answer this question through fundamental analysis of macroeconomic data, yes, but also to what's actually happening right now. So you can go to risk analysis, you go to the gauges, and you see right away, mix, 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 done. You're neutral. Now, for those that are saying they're risk on, you might be trying to get in front of an inevitable this moving to risk on, but it is not risk on now. Okay? But you might be like, so Jim says using, watching the current moves in the stock market, for example, right? Oops. So you could get that in two ways. The bigger picture, this is what's happening on the daily chart. And you're like, okay, well, this is a buy a dip scenario with continuation projected as, to 57.50. Best case scenario. Base case moving up to 56.75. So that would be over the next 7 days risk on. True. If that occurred, you might see some assets continuing. That's one way. But that's looking out for the week. So this is sort of like a swing trade. Now, more localized, we'll say, like as far as today is concerned, you could look at the scatter plot. And Jim says use equities. Okay? Otherwise, in this case, stock indices. And we have Russell up, S&P 500 up, NASDAQ up, Dow up, FTSE up, and DAX up. So, yeah, generally speaking, all the stock market indices are up except Nikkei. That's why the yen is strong. Okay, great. Cool. So, yeah, you could argue this right here, right now. There's a bit of bullishness, aka risk on, built in. Yep. So when you go to your Trader's Way MT4 or MT5, okay, you can try to line some of this stuff up. Okay, so Nikkei is way down. You should be able to see this. It has a positive score, but it's down almost 2%. So you should know through correlation that brings, okay, a scenario like this, doesn't it? Okay. And we are already at tomorrow's sell zone. Oh. Emil says, so recession avoided. No. What we're analyzing, I don't want to quite go back. I guess I can go back. Okay, like when we go risk gauges. We can say the narrative has changed. Yes, on the longer term, yes. But all we know, especially like today or this week, there's no intrinsic trend. So people have done what they have done. If they were going to sell, they sold. If they were going to buy, they bought. If they're out, they're out. And now really it's just a waiting game. So really the answer here is nobody knows whether it's a recession or not. If they all thought it was a recession, it would all be risk off. If they thought a recession avoided, it would be all risk on. Okay? Okay? All right. So Nikkei is down today, and when Nikkei is down, the Japanese yen gets strong. I just grabbed euro. It's just one. There's nothing important about euro. I'm just showing yen. And if you're going to look for a continuation of risk off on the yen pairs, which is really just stop losses on the Nikkei. See, you probably know hedge funds have been buying the Nikkei for about 2.5 years. Well, now they're getting stopped out. Now, one of the things we did in the Quant Box session today is we went through the Commitment of Traders report, and we saw very interesting things there. If you're not a subscriber, then I'm sure you went and did it on your own and spent hours and hours reviewing the Commitment of Traders report. And if you didn't, I don't understand why. But anywho, Okay? So this is one possible thing that you could be setting up today. That's a little day trade. But it's based on tomorrow's pivot points. Because today is already done. And I've taught you and I hit you hard on this, so I won't be too mean. But this is what you were supposed to have done last night. So an amateur would walk into today's New York session and say, what's going on? Well, for the last several hours, traders have been taking profit. They're done. What are you doing? I just walked in. Okay, be careful. Now, the second thing is the new trades are going to likely be on tomorrow's sell zone. So they're entering those trades, and probably here's where we'll bottom out tomorrow. Probably, like today we bottomed out at the London session. Okay. You might want to check different time frames. Okay. But I hope you see that possibility of this up. And then if we get a down today, then you'll have a 21.55 cross on the 4 hour. Okay. Yep. Okay, and remember how we organize our thoughts. Okay, this is how we organize our thoughts. Cool. Okay. And that's Euro Yen. We're bearish, but we're even more bearish on CAD Yen. But you know this. It's all quantitatively done. Super easy, super clean. Lovely to your mum. Okay? Cool. So then you can automate all your technical analysis, right? Yeah. And so you want to decide fundamentally first whether you want to be buying yens or selling yens. Do you want to be buying the dollar or selling the dollar? What about the Swiss franc? Do you want to be buying the Swiss franc, meaning Swiss pairs down or Swiss pairs up? You need to understand all of that before you look at these charts, okay? Don't do this first, because you don't know. If you just start here, you don't know why you want to trade. If you don't know why you want to trade, by definition, you are an amateur. You're like, well, the RSI told me. That means you don't know how to trade. Oh, the MACD. Oh, the CCI. Oh, the stochastics. Oh, my bat Gartley. No. Those are what? Those are whats. What happened? The Stokes crossed. Okay. What does that mean? It doesn't explain why. Are you bull or a bear on pound yen? I don't know. I'm waiting for the MACD. What? Okay. So anyways, I hope you filter everything with your bias, your opinion, because people will pay you for your opinion. If MACD worked, they don't need you. They'll just do an algo that trades MACD. Okay? So, you're like, why'd you buy Aussie Swissy? Because of a 3-drive emerging. Like, wait, what? No. How about this? Why buy Aussie Swissy? Well, I've analyzed the economic data out of Australia, in particular their recent monetary policy statement. And it seems to me, in my opinion, Australia absolutely will not cut interest rates anytime soon. So we have stable and relatively high interest rates in Australia. At the same time, looking at the economic situation in Switzerland and its current monetary policy, it seems to me there's no way in hell they're ever going to raise interest rates. They're probably not going to do anything with interest rates, but if they did anything, they would cut. So we have this divergence in central banking policy of high interest rates in Australia, low interest rates in Switzerland, and stability in this pair relative to the craziness we've faced in the yen. So here we are, we have a likely stable asset that has a high carry. So I'm looking for potentials to get long on Aussie Swiss franc as a carry trade. Is this it? Well, I don't know about that. No, I don't know. Is this the pattern I'm looking for? No. But if it makes a higher high, higher low, I might be interested in that. Okay, that's a much different take. Okay. Yeah. Cool. All right. One of the things we've added actually quite a bit of things here over the last week. We've added a couple of other sort of heads up, if you will. Okay. Aussie USD. Just showing you that it's had a big move and you should be aware. Because it's trending up. See, one of the things, talking to the developers, I'm like, continuation patterns are okay, reversal patterns are okay, but I want sort of trend. I want to see a trend in the radar, and this is showing you we've had a big move. Doesn't mean it'll keep going up. But what it does mean is we probably want to buy a dip. So this is like when there's a big move, in this case, a big 136% increase. You're like, okay, maybe this is a breakout trend. At least something to does this make you want to go look at your Aussie dollar chart? All right, the 1 hour Aussie dollar chart. Yeah, and what we might find over the next 18 hours, a fade, and maybe later in the day or maybe tomorrow you buy a dip on this sucker. That's what I wanted to see, okay? So you probably haven't seen something like that before, but we added that. And it's not a historic, that's kind of the thing. It's not a historic technical pattern. Is all of this stuff are technical patterns. But we have the data. And so it's not a technical pattern. I'm just like, I want you to give me the heads up that we have a move. We have a trend. So a big movement makes me laugh. But, yeah, but it's a heads up, right? So funny, big movement. Yeah. The subtlety in the English language on that one is funny. Yeah. Which also reminds me, on Friday, I had a 27-ounce steak. Yeah. Anyways, if you know what a big movement is, that's funny. All right. What else? So anyways, so we start with our fundamentals, And, a good process, if you want to look for a daily process, we go back and we start on the fundamentals first. Okay. Or, you could go the other way. You could go the other way. You could start with Aussie dollar first and then go to your scorecard summary. And I think this is a good manual process. So so we got the big move, right? We got a big move on Aussie dollar. How much do we buy into that as a plausible trade setup today? And it's a 3. We don't like the COT, okay, but retail short, so maybe. Seasonality, not great. Trend is strong, so obviously we already know that. So it's like, a maybe. So you could say, well, we're neutral, but maybe the fact that we had the big move is that it's moving from neutral to bullish. So it kind of gives us a little heads up. You see what I mean? So we could go to the Aussie dollar camp. We'll do it over here. Okay. And, okay. And remember, 2 hours ago, QuantBox, well, in this case, TRADARS gave us the heads up here that we have a big move. And that's what it's noticed, right? So how do you trade a big move? Let me get my drawing tool. I haven't fired it up yet. So 2 hours, you got a heads up. Well, isn't that what this is? Oh, for sure. So let me get my drawing tool. So what you could be doing or could have done, because remember, you got the heads up 2 hours ago. I'm still waiting for my drawing tool. Oh, it's way over there. All right. Okay, we'll do it this way. 2 hours ago, right, we noticed this big move here, right? So what could the next thing be? Now, how's the next setup? Well, what I've taught you is then you look at the old resistance, okay, and you drag it across, okay, and you buy the dip. You see how that big move in the radar, technical radar, could be helpful? You double check it. Can you be a bull? You're neutral, but it is technically bullish, so you're not doing anything radical. But the thing is, this may be a turning point. Maybe we are moving back toward risk on. Okay. Of course, I would still mark this. You never know. Okay. Right? It's a simple pullback on a 4 hour. You do this on all time frames, really. So on the shorter time frame, okay, I would be looking for things like that. So even on a 15-minute chart, okay, it's the same thing as the heads up that we had on the 1 hour. Okay, we had this big move. Okay, what I like to do is draw these boxes. So just like that, you draw your little box and you buy a dip on the bullish big move, you see? So over here, QB lets you know. So you thread it together. Beyond that, you thread it together. You're like, oh, we have a big move. I guess I'm going to buy a pullback. You have a +3. So up here you put QB equal 3. So that's all good. You have permission. You buy the dip on the roll reversal. We call that price action. And now you're making money. That's how TRADARS works. It's a combination of fundamentals and technicals. Okay. That's killer, isn't it? So that's what you could have been doing 2 hours ago, and now you're making money. That's the idea. Okay, that's the idea. So when you see something like this, okay, you want to look for something like that, and then you want to take it north. Right? Never drink and drive, never buy high. When you go to the settings, we've added more cross pairs, trying to match everything that we have on QuantBox, because QuantBox is now integrated into TRADARS, so we need the radars, the technical radars for the that match the fundamental radars. Okay. Yeah. Okay. And on the trend side, we've added, again, they're not really patterns. They're heads up. They're little like, again, they're not technical patterns. They're sort of trend warnings, or warning's the wrong, what's the opposite? Highlight. Now, it highlights trends. We have two ways to just say, hey man, go check this trend out. Okay, not a reversal pattern, not a, whatever. So just so you know. Neat, right? So we were talking about Aussie Swissy. You could turn all the Forex pairs off except Aussie Swissy. Or you could say, what are the things you're bullish on that you could trade against Swissy? Well, CAD is weak, so we could skip that. Swissy Yen are both funding pairs, so we can skip that. Euro Swissy, maybe. If again, you're looking for only bullish scenarios. Pound Swissy. See, we couldn't do this just a week and a half ago. We didn't have things like Pound Swissy. Now, and you're like, Wayne, so that's really nice you added it. Yeah, do you understand we have years of Pound Swissy data on multiple time frames? Tens of thousands, if not millions of candles. And you're like, yeah, I get it. You just threw that on. A little more than that. Yeah, it's not a big deal. Okay. Kiwi, not really interested in Kiwi. I don't think Kiwi's bullish. I could double check the score, but whatever. And then USD Swiss franc, again, double funding pairs. I don't really want to do that. So I could use this process to say, I want to sell Swiss franc because I don't believe they're going to raise interest rates. And they've already cut. So, it's a funding currency. And if we roll to risk on, these would benefit to the upside. Pound seems fairly strong. Euro is a big maybe. And Aussie, well, at least is stable and is not going to cut while everyone else is cutting. So that might turn into something beautiful. You see, those are all giant maybes, but there's a why behind everything. Good morning, Alu. Right? There's a why behind everything. So we go there and say, I'm only interested in bullish patterns. Okay? That's not exciting. Pass. Falling wedge. Pass. A, B, C, D. Okay. Pass. Why? I don't buy lower lows. I buy, in this case, a triple bottom or a higher high. That's not quite the pattern, is it? So that's a pass. I buy higher lows, but this is a falling wedge. I don't buy falling wedges. So that's a pass. You see how nice this is? Okay, I want to buy Pound Swissy, right? Yeah, it's a falling wedge. Pass. Aussie Swissy on the hourly. See, this is different. This is a 15-minute chart. So Aussie Swissy, up channel, yeah, I might be into this. And here's my prediction for the future. You ready? My prediction for the future. Up will lead to higher low to higher high. So I put that on my radar for today. I go to my chart and I put that on my radar. Oh, check this out. This is how the Wayne do. Yeah. All right. Right. Aussie Swissy. Cool. And we were looking at the hourly. Okay. So if it makes a higher high, okay, I can buy in there. And I could consider something down at that price. Drop into a 15. Let's go. Okay. So like even this little move we just had is tradable. Now you might be too aggressive and then it comes down a little bit. Well, then you buy it later. The thing is, it's a role reversal. Okay. The radar says we're on our way. 58. Okay. Then we'd expect a pullback and then a breakout. Okay. We're at 58 now. So on a 15-minute chart, maybe it pulls back and gives you an opportunity. That would be somewhere in here. I'm going to try to mark. Well, you know what? A triangle might be an easier way to mark it. Okay. So I'm like, well, what about down here somewhere? Could be a rabbit. Okay. Let's go to the hourly. Where's that one? Probably a little lower. Probably this one. Cool. Let's go back to the 15. Plan A, plan B, done. Plan A, plan B, done. Oh my God, we nailed that. Dude, that just happened. That's the way to trade, isn't it? I really have 3 plans here. I could take a shot and ride this zone. Plan A, plan B, plan C. Okay. Oh, it's so good. Okay. So good. Okay. So have you tried trading on the smaller time frames and you have a market open, right? So the stock market opened. Okay. This could be your first stock market open trade. Notice that this has been going on for a while. So here's the previous high. There's the new low. Okay. Okay. Over and over and over again, right? Over and over and over again. There's so many loads and reloads and reloads and reloads and reloads. Okay, simple price action. Notice you just keep doing this over and over and over until you get a higher low. Sorry, a lower low. And we haven't had a lower low since here. One, two, three, four, five, six. So you should be in your 6th hour of scalping to the upside on Aussie Swissy. Okay. Cool. So you get a high higher than that high. Okay, cool. Then you get a high higher than that high. Okay, cool. There's one more. There's a high. Okay. That one might have been difficult to catch, but then the new high. Okay, didn't make a lower low, got very close. Maybe it knocked you out. If it did, it'd just be by the spread. Okay, but nonetheless, higher high, draw it across, buy, didn't make a lower low. Higher high, drag it across, buy, didn't make a lower low. Higher high, drag it across, buy, didn't make a lower low. Higher high, drag it across, buy, hasn't made a lower low. So if you were going to continue this way, you'd probably be long somewhere in here, and all your stops now have been moved. If you're stacking and packing them, that's one way, so that it's like multiple scalps versus trend trading. And we analyze this in QuantBox. Like today's maybe is not a good trend trade day, so you stack them and pack them, and then you leave. So you've moved the stops, and if it makes a higher high, okay, we don't know if it does, but if it does make a higher high, you're going to drag across in that new buy price. So what will happen is we're looking at like this, okay, could produce something like this, and then you'd buy that one, and then off you go. And if that occurred, then you move all the stops up to this level. Up to here. And now they're all here. Does that make sense? Abdullah! Mullah Abdullah. If it comes down, okay, then you're just taking out of all of these for profit. So you get these pips and these pips and these pips and these pips and these pips. Yeah, and it's, it's just price action day trading. Straight out of the price action course. Right? So, like, for example, a trade entry somewhere in here, okay, produces a stop somewhere in here. And since you were in all these other trades, you would move all those stops to that same place. They're all here. So if New York opens and it opens positive for the first half hour, and then there's a massive move down the rest of the day, well, you're out here on all the trades. So it's definitely not a swing trade, right? Okay. Okay. Right here, if you don't use the 5-minute, then in your mind on this 5-minute, this triangle right here is the 15-minute 5 EMA. You want to see it? Okay. See? Easy, right? Easy. Well, if you're scalping, you're trend agnostic. I still prefer trends. So I try to only scalp in the direction of my fundamental bias. But if you're playing the price action on the move, you still should know why. You should know what pair, and you should have multiple time frame analysis. Like if you can't, you're not going to be successful scalping if you pick the wrong horse. There are a lot of currency pairs you could be spending your focus on. So knowing which one and why is helpful to make the right selection. Okay? And then from that, it's time of day. So like we're rolling into 10 o'clock. Yeah. So the news open is probably played out. And, so now we got like a bunch of big red candles. That's not abnormal at all. The next, this would probably come down to about 10:40 to as much as 11. Okay? So we'll see. It either recovers now or it's going to come down quite a bit, and then it's going to behave, like I said, 10:40. Okay? The reason I say that is then the mood of the market changes as Europeans start to exit the market. So from 10:40 to 11:30, okay, then you have different behavior as Europeans leave the market. And they're usually not adding money and going. They're usually removing money and going away. AKA, they made their money, they take their profit, and they go home. And then you have to deal with that. Americans deal with it by going to lunch. And then once all that's done, then Americans come back and set up their sort of mid-afternoon to American close type trades. And then that fizzles out. So there's a normal, logical ebb and flow of money throughout the day. Okay, so if what's been happening for the last 4 or 5 hours fizzles out now, well then write it down. What time did that happen? 10. I think you'll notice that that's not unusual. Okay, again, what happened? People did a front run of the U.S. Open. The U.S. opens. And then they take some profit. Is that unusual? No. Now, typically when there's no major news at 10, it changes the behavior of the market participants. If there was big news at 10, they would want to get out of the trade by 10. If there's no news at 10, very often this continues to about 10:20 to 10:40. Because even if there's no news, well, there's definitely a market close. So if there's news, they get out early. If there's no news, they stay in a little longer, is the logic. 10:20 to 10:40. I used to actually say 10:38 to make it very specific. So I'm not making this up. I've taught this 20 years ago, right? So there's a time flow. But remember, it's based on humans. So if we see red candles, they're taking profit. Now, I don't have massively detailed charts here. And it could be very easily, that is a technical spot to take profit, right? So let's change the template just for fun. So what we want to do is look at confluence, right? And no major pivots. Was there a psych level? Yeah, 58 maybe, huh? Maybe we're too sensitive on the chart. Okay. Maybe we have it come down a little bit. Okay. And then re-engage, because remember I had plan A, plan B, plan C. Re-engage later on a 5-minute chart and just rinse and repeat what I just showed you. This is the, I guess we got fairly close. 5803. Yeah, I mean, that could be it, where you can see since London Open, the market has driven Aussie Swiss up to pretty close to the daily conservative target. I mean, we could still do like one of these little things first. I'm looking at this level and this level. So right around that future 21. We could have some capitulation for a bit in the New York session. And then the Europeans leave, and then we get sort of a bigger down. And then the Americans leave, and we get a bigger down. And then we start buying it back in Asia or London tomorrow. Now, it's probably going to close higher, so I'm going to need to move these pivots, this idea, because these pivots, this green one here is likely to move up because it's still dynamic. So, I guess we'll just say that pivot point. Okay. And so like there could be one more down, then we kick it up, and then everyone gets out, and then more people get out, and then we start building the position again. And what we're doing here is all doing this on like a 5-minute chart. Well, Linda, bias is a longer term issue, isn't it? So QuantBox is going to give you two aspects of time. One of them is based on the quantitative analysis of macroeconomics, what should be, based on trade balance, based on monetary policy, based on seasonality, based on things like, their jobs, the inflation, GDP. Okay, all of that is, updated. Let's say the average economic report is monthly, right? So like you have sort of what should be, but then we also in QuantBox analyze what's actually happening now, because you could have unseasonable movements or based on the changing opinions of what the central bank's going to do next, not what the central bank's doing now, but what's the next move by the central bank. And therefore you get a shift in market sentiment, not the economic data, but the opinion of traders. Okay, economics versus market. And so we'll look at that. So the bigger the time frame, the more likely it's going to match QuantBox's economic data. But what's happening today may not match that. So we want to know that's good information. It's not that one is wrong. It's that we lack congruency. So in general, let's say Aussie Swiss franc could go up, but for the last 20 minutes, it's going down, right? And you're like, well, it helps you determine whether something is reversing or pulling back. So the way I look at things, Linda, is that I go in and I have a belief, what we call bias, that I want to be long Aussie Swiss franc. Okay? The next question is, should I long today? Should I buy today? That's more technical. That's more daily analysis of smaller time frames. Like when we have the risk gauges, we have daily, weekly, monthly. They're all correct, but different time frames, right? So the monthly, you'd probably use like daily charts. Weekly, you probably use 4-hour charts. Daily, you might be using 15-minute charts. And in the most ideal scenario, Linda, is that we have the same bias in all time frames, right? But it's not always true. It's often true, but not always, and that's very useful information. But I am a bull on Aussie Swiss franc, and I see lots of buying opportunities here, no selling. Okay. Okay. And I love the process of dropping the bias onto the chart manually and then manually entering it every single day. So it's only a 2, but it's helpful because it won't always be a 2, will it? So I like to do this where I go QB equals 2. And a few days from now, it might be a 4. And so as I'm building it up, you see? Cool. But here we're just doing our little skippity scalpy, tickety, bibbity bobbity boo. Cool. How many people here liked what we just did on the 5-minute chart, showing all the buy the dip scenarios? Okay. Yep. Yep. Just, hey, that's price action. It's at Investor Bootcamp. But it's also here where you go to courses and we do principles of price action. Huh? What do you think about that?
So we're gonna do the lesson of the day here, and we're gonna start by building our trading strategy. So every day we're gonna do sort of 20 minutes of this.
Okay, cool, right?
All right, everybody. So we're gonna
continue to move lower down by around $5, just above.
Look, he has the old squawk running in the background. Told you we used to use a squawk.
T90.
We're gonna talk today a little bit about.
That's funny. All right, so this is the price action course, right?
All right, everybody. This is installment 3 of our little lesson series we're doing here. We're gonna talk about Fibonacci. Bear in mind that trading.
Cool. Anywho, it's all in there. So there's our little skippity scalp, bibbity bobbity boo. So on this time frame, you can see it's here. On the other time frame, it's harder to see. Okay, but the old high becomes the new buy zone. You just do it over and over and over and over again. The old resistance becomes support. Okay, but don't be shocked now, as I've already shown you, once we get elevated into the target zone, okay, and well, I don't know if this is actually a target zone. This is more of a higher time frame pivot. No, it's the target zone. Let me go back. Okay, we are approaching now, if you can see it, right? Target conservative. Target bullish profit zone aggressive. So there are two places now where your price action is likely to fail, and it's between these two lines. Okay, you see? Price action to the upside is not going to last forever because you know every up has a down. So that's why I'm preparing you here. Okay, I thought it might come down a little lower. No, it just came back on the little basic roll reversal. But now we've got up even closer, and at some point, I think it could produce on smaller time frames lower lows and lower highs as markets close. See, think of it. As London closes, as New York closes, they're not likely to add new money. They're likely to remove the trades, aka profit taking. So it fades down, right? The Asia fade, and then we start to reaccumulate later. Asia open, London open. Okay, and that is also in the course under day trading. I specifically teach that. Okay. Boom. All right, so we're recording. Straighten your tires. Yeah. Right? Day trading. 60% of the time, it works every time. Yeah. Oh, whoa, what? You trade inside the wicks? Oh, wait, you don't know this stuff? Oh, terrible. You don't know this stuff? Why? Why don't you know this stuff? Okay. Killer. Killer is all I'm trying to say. It's killer. Yeah. Oh, it's killer, isn't it? Yeah. Oh, yeah. Cool. Well, I didn't get to bed till midnight last night because of all the travels. So maybe I'll bow out. I'll tap out now. I will see you today at 4 p.m. at Investor Boot Camp if you're in my day trading group. Remember, you need a trustworthy, ethical foreign exchange broker, and ideally an ECN with straight-through processing. For me, that is Trader's Way, and it has been Trader's Way for 10 years. So you should go check them out. And everything else is going to be rolling over to TRADARS very soon. Very, very soon. So maybe in the next 2 weeks, you'll be logging into TRADARS every day for your coaching and your courses and community and calendar. Okay? I was going to show you this. I forgot. But, okay? When this loads, it'll show you all the trading and scalping opportunities that you'll have this week. And it's a crazy version of a calendar. It's crazy because it analyzes the history of all the news events. Now, sometimes it doesn't load like It doesn't load well. It's a lot of data. So what I do is I just refresh it. Oh, and sure enough, it loaded. Okay. So when you look at this, tomorrow the Bank of Canada is getting the inflation rate. That does move the market, and it moves the market in reliable, repeatable ways. Later, Bank of Japan, again, it moves the market in reliable, repeatable ways. Then nothing all the way out until Thursday. Then again, another Bank of Japan. Okay? Now, Jackson Hole is not an economic event, so it doesn't analyze that. But we know Friday is going to have some vol around that. And then German IFO on the 26th produces volatility with reliable, repeatable patterns. This is crazy when it's going all the way out to the rest of the month. These are, as far as news events, these are the only things you need to care about. And everything else might create volatility, but it won't create reliable, repeatable patterns. It's incredible. It's like, to me, it's like out of everything on the calendar in the next 2 or 3 weeks, this is what you should be aware of. It's either an opportunity or a threat, okay? Because it'll move the market. Now, everything else either doesn't move the market, but might get overhyped by the media, or it moves the market, but is not in reliable, repeatable ways. So you know what to pay attention to. And most people just, I don't know, scalp the news. This would be helpful to scalp the news properly. Cool, right? All right, we're done. Peace on earth. May the pips be with you. May our profits be above average. Woo!